Picking the right retirement account as a solo business owner can be the difference of tens of thousands of dollars of tax savings in this calendar year. If you're a solo business owner and you are not asking the question, what business retirement account should I use, then you are not thinking about things correctly. So let's talk about which retirement account options that you have as a solo business owner. One is a solo 401k and the other is a SEP IRA. Most times I see business owners have SEP IRAs. Why? Because that's what they were told to do. So what ends up happening is calendar year is over, you sit down with your CPA and you say, how do I save on taxes? I owe so much. And they'll tell you, well, open up a SEP IRA. The reason why they tell you to do this is because it's the easiest and you are able to set it up later in the year than you typically are with a solo 401k. The other one that you want to think about is a solo 401k. So the great thing about a solo 401k is it has an employee side and an employer side. If you have a $150,000 salary as an S Corp, with a solo 401k, you're able to put in $23,000 on the employee side. That's the max, just like any other 401k. But you're also able to put in $37,500 on the employer side. And you can see the difference, right? That means you're able to put in $23,000 more into the solo 401k. So I want to hit on that again though. The biggest benefit so far is that you can get in a higher amount than with a SEP IRA because it has the employee side. So what else do I like about solo 401ks? The other thing I like about it is that they have Roth contributions. Yes, I know there is now the ability to do Roth and SEP IRAs, but this is something that I haven't really seen any custodian do yet. One big benefit is you can do Roth. You can do Roth on the $23,000, and then above and beyond that, you can do the mega backdoor Roth 401k. So let's use that last example and say, hey, I made $150,000. I want to do all Roth. I'm going to put $23,000 in via the employee side Roth, and then I have $46,000 of room left. Because it's a mega backdoor, you just need to have enough earned income to do this. And because you have the $150,000 salary, you could do all the remaining $46,000 to the mega backdoor Roth 401k. You have the Roth ability, you have the mega backdoor ability, and one other benefit that solo 401ks have is you're still able to do backdoor Roth IRA contributions. So for most of my clients, they're well over the Roth IRA contribution limit amount. They cannot contribute to a Roth IRA directly. So instead they do the backdoor Roth. The backdoor Roth means I put money into a traditional IRA, I don't deduct it, and then I convert it over to Roth. But the IRS says, hey, if you have any money in other pre-tax IRAs, including a SEP IRA, then that means that the backdoor Roth is taxable. So let's say you have $94,000 in a SEP IRA, you want to do the backdoor Roth with $6,000. Well, the IRS says $94,000 was pre-tax, $6,000 was non-deductible. So on that $6,000 conversion, 94% of it is taxable. With the solo 401k, it does not trigger the pro rata rule. So you're able to do backdoor Roth IRA contributions. Really the two best retirement accounts for you as a solo business owner are a SEP IRA and a solo 401k. Both of them can be good. SEP IRA, again, there's no employee side, it's just employer side. You can do 25% of W-2 wages or 20% of business profits. With a solo 401k, it's the exact same, but you also have the employee side where you can do the $23,000 as long as you have enough earned income. So it allows for higher contribution limits. It also has the mega backdoor ability, which allows you to put in a lot more via Roth. And because it's not in an IRA, it gives you the ability to do backdoor Roth IRA contributions. For all of those reasons, I like solo 401ks better than SEP IRAs. The one thing that you do need to know is it is a little bit more to set up a solo 401k. And once you cross $250,000 of assets in the plan, that could be between you, a spouse, etc., then you have to file Form 5500 EZ. Some providers will do that for you. If you use a place like Fidelity, Vanguard, etc., you're going to need to hire what's called a TPA or a third-party administrator to help fill out these forms and file them for you. But at the end of the day, it's a little bit of added work. It's maybe $250 a year, but if you're able to get $23,000 more in contributions, that more than pays for itself. So as a business owner, make sure you are thinking about this. Even if you're not worried about tax deferral this year, the Roth bucket is really great because it gives you that tax-free growth so you avoid capital gains in the future. Thank you for watching. If you enjoyed this video, please leave a like and go follow my page for more personal finance content. And as always, if you have any thoughts, please leave it in the comments below, and I promise to get back to each individual comment. See you next week.